Well, guys, by this time we have already understood the basic structure of two important uh, financial statements. One is the balance sheet, and the other one is the income statement of PSA Corporation. Now we need to know that from where few numbers come. Many of these numbers we know it's very simple. It's already given that because 1200 units are sold in 6 months and each unit cost, sorry, not cost, its price is $1,200. So each unit's price is $100, and because there are 1200 units sold in 6 months, so total net sales is $120,000. So this is very easy to compute. But there are few numbers which we need to look into, we need to look into details that from where those numbers are generating. So for example, this one 78,000 cost of goods sold. So this is not like just, yes, anyone can give you this number, like okay, just write that the cost of goods sold is 78,000. But what were the back end internal schedules which PSA Corporation owner has prepared in order to come to 78,000? This I'm going to show you over here. So let's go over here. So there is operating schedules. So these are not usually shown to the investors or to the creditors. These are the corporations management which they are making behind the scene in order to compute that what is the cost of goods sold, in order to rightly deduct them from the revenues to come to the right number of gross profit. Because if this gross profit is not correct, nothing will be correct hereafter, and your net income will also be incorrect. So operating schedule, first of all, there is first operating schedule which is called cost of production schedule. So what is the production happened, and how much units has been produced, and how much expenses has been incurred in order to produce those units. So remember, this PSA corporation started making scanners from July, and they kept doing the operation for 6 months from 1st of July until 31st December. So this is the cost of production schedule. This first one, this one which I have highlighted, is the cost of production schedule. And now this is the breakup. In order to prepare a scanner, the PSA Corporation needs the electronic parts, plastic material for the outer body of the scanner, connector, and the direct labor which will be going to assemble this scanner using these above three basic components. So in each scanner, while making the each scanner, the $40 worth of electronic parts are used, $5 worth of plastic materials are used, and $5 worth of connectors are used, and the direct labor in order to the direct labor cost which is going to be incurred in order to prepare or assemble each scanner is $15. So cost of producing one scanner is $65. So in the month of July, if 200 units are produced, then this is the breakup. It means 200 multiplied by 40. Look over here what I am doing. So D6 into E4. So it means if you multiply this D6, which is 40, D6 40 multiplied by E4, you will get 8,000. So 8,000 worth of electronic parts are used in the month of July. For making the same these 2,000 scanners, 1,000 worth of plastic material is used. 200 minus 200 multiplied by 5. This will give you 1,000. Again, you see it's written D7 static E4, right? Then in the head of, there are some dollar signs. I will tell you very quickly in short while that what does these dollar sign are doing. But over here the main thing is this, it's D7. So it means that this D7 is getting multiplied by E4. Over here the Again, 1000 worth of connectors are used. So $1000 is coming again by this D8 multiplied by E4. Now check over here. It's D8 multiplied by E4. And then direct labor is 15 multiplied by 200. It's giving us 3000. So if you add all these things together from E6 to E9, this will give you 13,000. So in order to make 200 scanner, PSA Corporation spent $13,000 in the month of July. So during the month of July. Now the thing is this, that I deliberately put this dollar sign because I want to lock this cell D6, because these units of production will going to change according to the different months. Like let's suppose there could be 200 there. Now in September it's no longer 200, it's 300. In October it's 300 units which are going to produce. In November also 300, and December 300. So these can basically these can be different from month to month, but the cost of these components per unit per unit scanner, the cost which we are going to incur in making each scanner, this is fixed over this 6 months. So that's why I want to log this cell, and how it will going to help me. So for example, there was nothing written over here. So now I simply copy this, and once I drag this formula over here, the automatically this 200 will basically multiply with this cell only. This 300 will multiply with this cell again. Then October 300 will be multiplied with also this 40. If I will not put the dollar sign as I have done over here, can you see, with the D6 cell, so I have to put a dollar sign before D and dollar sign before 6 in order to lock this D6 cell. Then if I will not be able to do it, then each time when within cell this 300 will be multiplied, it will not multiply with this, but I want this 300 units in the month of November to be multiplied with this 40. So this 40 is static, this is not going to move. So if this is static, I have to lock it by putting the dollar sign behind the D and behind the 7, that's behind the 6. So look over here again, D dollar D dollar 6 multiplied by this I4. So this, once I dragged it with each new unit in the new month, so with each new number of units in new month, though that will be dynamic, that I need to change, but I do not want this $40 to change. So that is the reason why I put the dollar sign. So likewise over here, if you see, this is dollar D and dollar 7 multiplied by E4. This is E4. But for the next month, I want this D7 to be multiplied by F4, not E4. So that's why I did not put E4 with the dollar sign over here. You can see that. So that once I start dragging it, automatically this cell start getting updated in in these cells. But once the production unit is going to be multiplied with the plastic material remains constant throughout these 6 months. So look over here, these numbers, if again I take it off, and now if I take away the dollar sign and now I drag it, I will get totally different numbers, which is wrong, because now this 200 is not getting multiplied with this 5. This 200 is getting multiplied with this 1000, because I did not put this D7 static. Look over here. Look over here. I wanted this 200 to be multiplied by 5 in order to find the cost of plastic material I have incurred in the month of August. So if you multiply by 200, with 5 it should be 1000 over here, but it is 200,000, which is very wrong, totally wrong. So the only way to fix it by putting the dollar sign behind D7, so dollar behind D and then dollar behind 7, this is going to make this 5 static. Now if I will move, everything will come into order. Look, now this is 200 multiplied by 5, 300 multiplied by 5, this 300 multiplied by 5, this 300 multiplied by 5 to get 1500 in November, and likewise the 300 in December multiplied by 5 to get 1500 in the month of December. So this is actually the breakup of the component cost the company has used in order to make 200 units in August. Likewise, this is the breakup of the component cost to make 300 scanners in the month of September by PSA Corporation. Likewise for October, November, and December. And obviously, down over here, I added all these numbers. If you add them together, you will be getting 30,000 over here. Likewise, 13,000 over here. And again, for all these things, for example, in December, the same thing. If you add all from J6 to J9, you will get 19,500 over here. And over here, the total is showing you that in this last column, the first row is giving you 1600. So you added all these together, all these units together. So the company manufactured 1600 units during the 6 month period from 1st July till 31st December. So if you add 200, 200, 300, 300, 300 in November and 300 in December together, it will give you 1600. Look over here, the formula. Sum from E4, which is this E4, until all the way to the J4. So all these numbers will add up together and give 1600, like over here. Likewise for the rest of the rows in this first panel. Again, if you see over here, EJ all the way from here to J6, E6, which is this, all the way to J6. So if you see this, everything is getting added over here. Likewise for the third row, fourth row, fifth row, and even the sixth total cost row. So it means this total cost row is saying that in the month of July, the company manufactured 200 units or 200 scanners, and the cost was $13,000. Likewise, for the August, they also again manufactured 200 and 13,000 is the cost. For September, 300 and 19,500 was the total cost, but only for the month of September while making the 300 scanners. But during all these 6 months, the company manufactured 1600 scanners, and the total cost of manufacturing these scanners is 104,000. Now the second schedule, the operating schedule made by the owner over here, is the cost of sold schedule. Like, what is the cost incurred on units which are sold? So in July, the company was new, it was the first month, so they were not able to sell anything. Remember that per unit cost of manufacturing the unit is $65, which is coming from here, right? So in July, they were not able to sell anything, so there is zero cost involved of which is related to the goods which are being sold, because there is nothing sold. So the cost of manufacturing the sold good is zero. In August, the company received the order of 100 scanners which they sold, and 100 multiplied by 65 will give you 6,500. So company earned 6,000, earned, the company incurred on those 100 units which are sold is 6,500. In September, they again received 100 uh, order of scanners which they sold, and the cost in which is involved in making those 100 sold scanners is 6500. The same thing, 100 multiplied by the cost of preparing or manufacturing or assembling the 1 unit of scanner, which is 6500 multiplied by 65 will give you 6500. In October, it's 250. 250 multiplied by 65, 16,250. 50. For November, it's again 250, so it's 16,250. And in December, 500 units. So total in December, it's a very good month because they are able to sell many scanners, which is 500. In fact, double compared to the size of the previous month, which is 250. So 500 scanners are sold in December by the PSA Corporation, and if you multiply by 500 with 65, so the total cost incurred in order to manufacture and assemble 500 scanners, which they have sold in the month of December, is 32,500. Now, if you add all these things together, the company sold 1,200 scanners in the month of during the period of 6 months from July till December, and the total cost which is involved, if you add them again together, is 78,000 in preparing those 1,200 sold scanner during these 6 months of operation. So this is the same 78,000 which has gone over here under the head of cost of goods sold on income statement. So this resolved our mystery that from where this number came. This number does not come out of air. There is actually a proper mechanism through which you get this 78,000. The owner has has written this 78,000, and this mechanism is given in this cost of sold schedule. Now let's go to the inventory. I want to know that from where what is the inventory by the end of the December. Why I need it? Because I now need to prepare the balance sheet of 31st December. I want to know what is the assets which this company is holding after 6 months of operation. So there is one balance sheet right at the start of the operation of the company, which was on 30th June, and then for 6 months the company went into kept continuing the operations, and this is the income statement. But once the 6 months has passed, the company's financial position got changed, because now the assets are going to be changed after 6 months of the operation. So for that purpose, we need to prepare the balance sheet of 31st December, which I actually already made over here. This is actually not an initial balance sheet. This is simply the balance sheet. The initial balance sheet is from June 30th. This is the balance sheet of December 31st, which is actually uh, the new position of the assets which company PSA Corporation is going to hold because of 6 months of operation. So the change in the balance sheet happened because the company went into the operations, they sold, they spent money, they earned money, and the items under the balance sheet got changed. The assets was going to be changed. So we want to see that. So one of the component is inventories, and that component will come from here, inventory schedule. So in inventory schedule in July, there was no inventory like finished good inventory. There was simple parts available uh, on the 1st of July, like when before the beginning of the operation. But this is not the finished good. This is just the raw material present in the warehouse of the company. So the PSA Corporation will use this 10,000 inventory in order to make the finished goods. So the finished goods is basically inventory 0 in July. Just there was a raw material. But during the month of July, remember from the cost of production schedule, they assembled 200 uh, scanners, and the cost of production was 10,000 material cost, 8,000, 1,000, 1,000. So if you add the material cost of electronic, plastic materials and connector, this will going to give us 10,000 over here. So simply sum of E6 to E8. So this is E6 all the way to E8, this one. So this is coming over here, and then there is a direct labor which is used to assemble those 200 units in the month of July. So that is 3,000 direct labor. So this 3,000 is coming as it is over here. So if you add to these two together, you'll get 13,000. Now what is the beginning finished good inventory? This is actually the finished good inventory during the month of July. But if there is something in the beginning, you need to add it for the available finished goods inventory during the month of July. But remember, in July, there was no finished good inventory when the month of July started. So only inventory which is available for sale is 13,000. Now remember, in July they were not able to sell anything, so that's why there is zero cost of goods sold that needs to be subtracted from the available finished good inventory. So 13,000 minus 0, look over here again, the cell E25 minus E26. So this is 13,000. Now this is the finished goods inventory available at the end of the July. And remember, it also means the beginning of August. So this will carry forward on the beginning of August. So now in their warehouse, the warehouse of the PSA Corporation, they have $13,000 worth of finished goods scanners already available. Now they kept on producing more scanners in the month of August. Look, 200, the same which they have done in the month of July. So that is the reason why we have almost the same numbers over here. In fact, totally the same numbers in these three rows which I have highlighted. So 10,000 materials, which is again adding these three numbers together, 8,000, 1,000 and 1,000, and this is going to give us this 10,000. Now there is a direct labor, the same thing. This direct labor is coming from here, so I included this 3,000 over here. Look, I have linked it with that cell. E is equal to E59. Look, so this sorry is equal to F9. So F9, if you go back, will be giving you this cell F9, right? So this is F9, and now we have total 13,000 again. But remember, this 13,000 is the inventory, finished good inventory, which is produced during the month of August. But in the at the start of the August, we already have some beginning inventory, which is again the same 13,000. Remember, this is the 30,000 which was manufactured in the last month and nothing got sold out of it. So this 13,000 is already available, and then further 13,000 worth of scanners were made during the month of August. So if you add the production happened during the month of August and the production this and the beginning inventory of August, you add them together, you will get 26,000 over here. Look, E24, which is this one, plus, sorry, not E, F20, this is F24. So in this formula, if you see again, this is F24 plus F20. So this is F24 and this is F20, right? So in total, we are getting 26,000, right? And then during the month of August, the PSA Corporation sold 100 scanners, which costed them $6,500. So if you subtract $6,500 from 26,000, the ending finished good inventory in the warehouse of PSA Corporation will be 19,500. 500 for the month of August. So simply 26,000 minus 6,500. Now this will carry forward as a beginning finished goods inventory in the month of September. So look, this is simply linked with this. In fact, I simply put sorry, over here if you see, it's F27. So this is going to be linked with this. This cell is F, sorry, this cell is F27. Now again repeat this process. Now I'm expecting that you will be able to figure it out, that from where this 15,000 is coming. So this 15,000 is coming from this from these three rows. 12,000 incurred uh, under the head of electronic parts in order to produce 300 scanners. Then plastic material was worth of $1,500. Then connectors were worth of $1,500. So if you add them together, this 15,000 will come over here. And direct labor was 4,500 in order to produce 300 scanner in the month of September. So this is going to be 4,500 over here, the same number which is coming from this cell. So if you have them together during the month of September, while producing 300 scanners, the PSA Corporation incurred $19,500. And remember what was the beginning balance? It was also 19,500. So they produced 19,500 worth of scanners during the month of September, but 19,500 worth of scanners were also already present there in their warehouse before the before they started producing more scanners in the month of September. So if you add both of these together, 19,500 produced during the month of September and the available at the beginning of the month of September, the PSA Corporation have new available finished goods to sell worth of $39,000. And again in the month of September they were able to sell just 100 units. So their cost of goods sold is now 6,500. Remember, it is coming from this cell. So 6,500. If you subtract this 6,500 from 39,000, you will get 32,500. Now this is the ending finished good inventory in September, and obviously it means the beginning finished good inventory in the month of October. And we did the same repeat. If you repeat the same procedure linked with the cost of production schedule and cost of goods, cost of goods, it should be goods, cost of goods sold schedule, you will see the same numbers. Just repeat the process which I have told you for the July, August, September, and eventually you will find that by the end of December your ending finished good inventory is $26,000. So all those goods which they have prepared, they kept selling during all these months of August, September, October, November, December, and the final inventories, remember, they produced more. They produced 1,600 and they sold 1,200. So at the end of the day they were left with 26,000 worth of finished good inventory by the end of December, and this is the same number which will go into the balance sheet of 31st December of PA Corporation under the head of the inventories. So this conclude my third part of current series of lecture on small business finance topic, how to prepare and use the financial statements. And in the next part we will talk much more about some other number of the balance sheet of 31st December of PSA Corporation, and we also talk about the cash flow statements. Thank you.